Now, switching gears a little bit, I want to bring in Chris Marinac. He is the Director of Research at Janney Montgomery, Scott, to talk about how AI is impacting financial institutions, but specifically the banking industry. Good morning.
Good morning. Thank you for having me.
It's great to have you, Chris. So, let's talk about this. How is AI transforming risk management and fraud detection when it comes to the banking industry?
Sure, the banks are now automating about 80% of their workflows through either an automated system or certainly machine learning to do a lot of the routine tasks efficiently and frankly much less expensive than it was 5 to 10 years ago. So that's really changing the back office costs for banks. It's also allowing them to be more consistent with their regulators.
Yeah.
Banks are heavily regulated by the Federal Reserve, the FDIC, the OCC, state regulators. All of them really are working in concert to better understand how banks are running compliance. And I think a great example of this is going to be your Bank Secrecy Act transactions, your anti-money laundering rules that banks have to go through, both for domestic as well as international payments.
Absolutely. And what role do you see AI playing in enhancing customer experience and personalization in banking services?
Sure, I think it's going to allow banks to have better information so that ultimately banks can service their customers and give them better products. A lot of times banks have to prioritize where there are banks who are doing transactions and really having workflow that support additional transactions. It could be a loan, it could be a payment, it facilitates speed for a customer. That's really how the experience is starting to evolve. I think it's still early innings, so banks are going to uncover a lot better ways to operate the tools that they are given from AI, but it is very much evolving quickly. We're seeing a lot of the major banks being the lead in this, and then most of the mid-cap and smaller cap companies are following.
Now, I want to talk about the job market a little bit. How might AI-driven automation impact job roles and workforce dynamics within the banking sector?
So we've seen a pretty steady trend of banks having less full-time equivalents in the industry for many years. I wouldn't necessarily blame that on AI. I would blame that on branch infrastructure coming down. I think banks are finding ways to do more with less. And the branches, the internal automation that's been happening long before AI was a thing, has been underway. This has been going on, frankly, for 15 or 16 years, ever since the last great recession in 2008-9. So today, AI is just simply taking quantum leaps forward to help banks automate. What we see happening is that banks may be cutting staff in one area, but then hiring elsewhere. They're still hiring a lot to do additional compliance work, additional sort of sales work, to try to not only data mine, but also prioritize where they need to be making customer calls. A lot of the banks are having success with tasks that are helping them understand from 1 to 10 which clients should get called first, which clients are doing more or less business with them.
I want to go back to your earlier point about regulation. In what ways could AI influence the future of regulatory compliance and reporting for banks?
Sure. So the Fed and FDIC and OCC all want to have a standardized practice where banks are doing the same thing routinely, consistently over time. They want to monitor those transactions and look for outliers. That's where AI can be incredibly helpful, but it also creates a standardization so that as rules evolve, that the regulators can actually implement them very quickly. And that's where I think that the machine learning can be very useful for banks the next 5 years. We think it's very much an early trend, but we think it will evolve. They are sort of the police, the police force and law enforcement for the industry, that is the Fed and FDIC, OCC. So as they implement these tools, it actually is going to make the industry better and really offer more products to customers, both on deposits as well as loans.
And I do want to talk about cybersecurity and the implementation of AI into business models in banking institutions, financial institutions around the world. So are you changing or prioritizing anything from where you sit when it comes to the cybersecurity sector and the implementation of AI? Obviously, there are deepfakes out there. There are bad actors that that could infiltrate financial institutions. Is there anything that you're doing to safeguard against those things?
Well, for me as an analyst, I'm asking a lot of questions to understand what banks are spending, what exactly they are doing in terms of where their efforts are to build out their systems. Obviously, cybersecurity is 24/7, 365. You have to make sure your board is up to speed. That's a critical factor. We're seeing banks stumble because the board is not fully engaged on the cybersecurity method. That is less true than it was 2 years ago, but it still is a factor that we have to ask and verify. I think that the cyber issues are going to help banks be better. Banks are very good at sharing data with each other internally. They don't always share cybersecurity incidents with us in the street on the public standpoint, but we know it's happening behind closed doors. We also talk a lot about what banks do during holidays. As we have a Labor Day holiday here coming up in 10 days, that's a ripe time for these cyber incidents to occur.
And which AI innovations do you believe will have the most significant long-term impact on the banking sector's profitability rather, and efficiency?
So I think overall the compliance work tools for AML, BSA, for certainly CRA, Community Reinvestment Act, are critical factors that every bank does, and that I think can save and also help them be compliant. That really does save legal costs for banks down the road. I also think that this customer automation that allows folks to understand who you're doing the most business with and where you can get that additional loan, the additional deposit, that's where the incremental profits are the greatest. When you have an existing customer, but you're doing your third, fourth, fifth transaction or loan with them, that's where the big money is.
A lot of key takeaways right there. Thank you so much, Chris, for joining us on the show today.
My pleasure.